Hello. Mic test. Hello, guys, and welcome to the webinar. And let me load up the screens. So first of all, let's start off the webinar. The disclaimer has already been shown. So a little bit of introduction for those of you who are new here. We are conducting the 150th edition of the Trading Opportunities webinar, and my name is Nirav. We conduct it every Friday, currently at 4:30 p.m. GMT or 10 p.m. IST. So if you are anywhere in the world, just convert the time to your time zone. Here is the time on screen. In the past 148 webinars, which we have conducted live so far in front of our YouTube and LinkedIn audience, we have captured a total of 374 trades. We will see what happened with the last discussion, 149th webinar in today's discussion, which is the 150th edition, and quite a big, or what you call, monumental number, 150. We have achieved week in, week out, a lot of work, and here we are, right? And before getting forward or further with the webinar, I must say, here is a quick track record from our past webinars, where you can see we have completely properly documented every webinar, its discussion, what was discussed, etc., over here, what happened after the discussion, date, instrument name, and the outcome, if things worked out, if they are +1, if not the -1, and the accuracies have been documented. I still have to update it to say that 2025 onwards, and correct the numbers here, because we have now done 149 and this is the 150th, and we have captured 374 trades. So big numbers have to be updated here. But anyways, I always like to show this page because I don't think many people keep a track record of their accuracy or and whatnot. It's public and been there for 6 consecutive years, so shows you who I am and why you should listen. Getting forward with the webinar, we will discuss the chart of euro, followed by crude oil, gold, S&P, Nifty, and BTC. And every time I discuss a chart, I'll then ask you guys if you are clear, and if you are, that's fine. If not, you can just type your questions in the live chat. Keep in mind, doubts are only taken in the live chat, and if you have doubts other than our discussion, like something not based on price action or Elliott Wave analysis, then I will not be answering them. Right? That's it, I think, for the introduction part. Without boring you any further, let's now head on to the actual webinar, and let me just load the last webinar first of all. And I can see here, hello Marco and Dawood. Just let me know if the audio is visible, sorry, audible at your end and the screen is visible properly, because from my end I can see it's fine, but again, a double confirmation is always better. So I'll wait a few moments here. Just any one of you can confirm. Do know that the audio does get delayed 5-7 seconds, and then the replies get delayed 5-7 seconds. I'll check what my end for a sec here. Yes, still fine. All right, so I'll assume, yeah, there it is. Thank you for the confirmation, Joe and Dawood. So what I'll do is I'll just start off the discussion first of all, and I do forget the text thingy, so let me just enable all the graphical tools here before we proceed. So first of all, here, as you can see on screen, we have the discussion from our last webinar on EURUSD. Right, and what we discussed here is what I would like to have a quick look at before we proceed with the live discussion. That's how we always progress. That way we know if things worked or not. So anyways, as you can see here, the idea was that we are looking for an impulse in the downward direction. Either the impulse is continuing and the fifth leg is remaining as a nested fifth, that is, it will have 5 waves inside of it, and 1 and 2 are complete. So basically, I'll draw on screen this, and these 2 legs were remaining, 2 legs down. Better if I use yellow color. So 2 legs down were remaining. That was the main idea here, and Second idea was if the market is not having any leg down and this is the 5, then this market will go above the trend line, take support, and then take off. That was the bullish setup. Now, we all know which setup played out, and let's just look at the live chart now so that everyone can see how it played out. Here it is, Euro chart. Let me just squeeze in and show you past analysis and stuff. So here it is the trend line. I'll actually go to 4 hour for a second, draw the trend line so that everyone can see and appreciate the clarity. So here it is, the 2-4 trend line, and this is the trend line we were suggesting that it should cross up, possibly take a pullback on the trend line and then take off. And as I did mention, it is not required to take the pullback and then go up. It can just go up, which is what it has done. So our analysis has performed quite nicely. In cases where it does not take a retest, we can use some past price action level as our resistance. For instance, in this case, this particular level, which is coming around 1.04406, could have been taken as a resistance level. And once this market has taken that out, we could have assumed that this market is now ready to fly or take off. Now all that has already surpassed and come to fruition, and I can just call this as a +1. That is one of the analysis which has worked out. If you were here and were able to follow it in live market or able to capture at least my view in the live market, to let our new audience know. If not, that's fine too. That's the reason I show the past webinars, because you guys have been really not very reliable when it comes to this, what do you call, setting up credibility and telling the new viewers. Anyways, jokes aside, actually that's the truth. So anything that we want to see from here is going to have two perspectives. First one, I'm assuming that it's going up as an impulse, and the reason is I do have to go to the daily, or I can just avoid that. Yes. So from this point of reference, which is price level of what is 1.1268, we are assuming that we have a zigzag kind of structure here. Right. If that analysis is correct, then we can see a takeoff from here. It has finished all the minimum requirements. It has gone down for the A leg, up for the B leg, and down for the C leg. And hence, we can say that the minimum requirement is complete. Hence, it's ready for takeoff. What I'm really talking about here is actually not zigzag kind of structure. It's a flat kind of structure with the wave C's a little bit going further than generally what we are used to seeing. Something like that is what we are looking at. So this is the first leg, correction to the upside, and down move in an impulsive formation. So ABC structure is complete. If that is the case, well, that's all well and good, and we will see that takeoff. That's what we will call as H1 is the primary hypothesis. I actually should have taken a bit of long position. Perhaps I will in a little bit of time, maybe in the next session, because I have 3 other positions open. So I am currently not very interested in increasing my risk exposure. Otherwise, it is long from my perspective. Anyways, that was the first view, H1 or hypothesis 1. We are assuming that it will just go up from here. Second hypothesis is conservative view, suggesting that this up leg is going to be short-lived. It's just a corrective structure and we don't have any evidence for it. So we are going to treat it as secondary hypothesis, low probability, and that is represented by the number 2 over here, hypothesis 2. Now, the thing to note here is even in hypothesis 2, we need to see 3 legs in the other direction. So it looks like the A wave is probably complete. We can count the B still in to come into play, and then the C will be there. So we still have a little bit of play remaining here. Let me just push an alert on gold, and we'll discuss it when we get there. I have a minor long position here. So yes, as I was saying, not to extend our discussion on Euro too far, the second hypothesis is H2 yellow suggesting A up, B down, C up, and we are assuming that that is still to come into play. So both hypotheses are suggesting short-term perspective, long positions can be taken, and I haven't taken any position. So perhaps we'll wait for this V wave pullback, perhaps not. But the ideal scenario here will be, let's get to the lower time frame 1H and discuss it. Ideal scenario will be to assume that this is heading up as a possible zigzag at once, Possibly the A is complete, and once the correction for B is complete, we can then look for this leg up. So basically wait for pullback or wait for completion of the pullback and then break out of this level, whatever that high would be at that point in time, is our basic hypothesis, scenario, discussion, whatever you would call it. So I'll check the chat. I haven't checked it properly. So if you have any doubts or questions here, now will be the time to post it in the live chat before we move over to the next chart of crude oil. Hello, Marco, one of our private Slack group members from Italy. Good evening, Raghu, again, one of our private Slack group members. Hello, Dawood. Hello, Joseph. I think I'm pronouncing it incorrectly, so I'll just call it Joe. Hello from France. Again, one of our private Slack group members. And thank you for the confirmations, guys. And yes, great to be attending 158th and great to be doing one. Didn't know we'll go this far at our series of webinars. 150. Mohammed, hello. How are you? So I don't see any doubts or questions here. So I guess we'll just move over to the next chart of crude oil, where I do have a short position, and actually I probably should, actually I'll discuss it once we get there. So here is the discussion from our last webinar on crude oil. And as you can see, we are expecting the market to continue a little bit up and then followed by a leg to the downside. This is basically, what am I even suggesting here? Let's see, A up and then ABC for B down and then C up. So we are in a flat correction. Within the flat, we are in the wave B, and within the wave B, we are again seeing a flat correction. So not making things too much complex, we just wanted to show you the rough discussion from our last webinar so that you get the idea of what we were discussing the last time. Minor up move, which will be then followed by down move, was the idea. We'll discuss the complete chart in detail. Now on screen, you have the live chart. And as you can see, if I just squeeze it a little bit so that you can get the complete picture. So last time when we were discussing, we were, I think, let's see, the date was 17th of January. So we must have been somewhere here. So the idea was that this market will probably go a little bit up and then give a correction to the downside and then head up. And we are probably assuming that this count is moving like this. This is the wave A of the flat. This is the B of the flat. And we will then have a C of the flat. Within this B of the flat, again, the B itself is a flat. In this case, probably an expanded flat, probably a running flat, whatever the proper term is. I don't really care. The structure basically is like this, right? So and this is the, what you call, small a, small b, and small c, quite clear here. Now, what we are looking for over here is update of the count. First of all, it did not go up. It straight off went down. That means the B is probably complete here. That's the first update. And then the second thing is C is already in play. And basis on the fact that C is probably already in play, we were able to capture, not capture, I would say, yeah, actually, I have closed one trade. So actually, let's look at the charts and see what trades we have taken. So this is the post from our private Slack group. Let's see. Today I entered minor shorts, but I want to check the actual positions from the beginning. So yesterday we added shorts at 77.42. This was a very quick kind of trade, and the target was whatever this is. Immediate target, I think, right? Booked profits on shorts. Immediate target was at 75.74, was it? So 77.42 to 75.74. A little bit less than 2 points. We were able to capture here and booked profits. Re-entered minus shorts. Today I entered shorts again. Stop loss is 76.98. And this is the count which we'll actually discuss on the chart now. And we are expecting further continuation to the downside. So now we have the live chart here on screen. This is the C leg we are currently looking to trade here. By the way, guys, let me know if my pace is correct, if you are able to understand whatever I'm saying. I am a little bit fast, I guess, today, and for good reason. Anyways, let's not get into too much discussion. Just let me know if it's fine. Otherwise, I'll reduce my speed a little bit. For those of you watching it as a recording, you always have the option to reduce the speed to 0.5, 0.75 or whatever. That's what the YouTube player is there for. Anyway, so here we have the wave B, and we are assuming this is a C leg. In progression, C legs can go down as an impulse or a diagonal. In this particular case, both probabilities do exist, and I am considering the riskier possibility. So I am assuming that after this B is complete, we are looking for a C leg down, and within the C, we have the 1 here and the 2 here complete. This will be the 3. You get the point, and the 4 and 1 will overlap. That's the main theme behind diagonal progression. So in this case, ending diagonal, wave 1 and 4 are overlapping indeed. This will be the structure, and the minimum target now becomes what is this, 75.016. It is actually a place where I can add some scalp shorts here further or more to the short positions here. And but actually I don't really care. I do already have a position here, so that should be enough. So you get the point here, right? Minimum is this low should be taken out, whatever that is. And if this is not the case, that is the market is doing something else, then it can what do you call it, continue going further lower, right? If it's an impulse can have a nested formation, 1 2 1 2 1 2, and it can just continue going lower and lower and lower. We are not going to discuss that. I have discussed that possibility as an alternate count in our private Slack group, but it doesn't make much of a sense here. We don't have the confirmation, and the rough idea should be enough. Further continuation can take this market to 74, perhaps lower. But from my understanding, I would personally like to take the short-term trade closed over here at the minimum. So once this level is crossed, I'll probably look to close my positions on the short. Maybe a little bit lower should be better, right? That's about it for crude oil. And yes, I would like to point out one more thing. Once this market establishes this level or anything here as the low and then decides to go up, taking out this trend line, then possible pullback and retest can lead to another long. However, do keep in mind, we are not looking for long like this, like long taking out 80, 81. We are only looking for a short-term long, reason being that even if it's an impulse, the impulse can have the first leg as a diagonal, as a leading diagonal, and then a continuation as a correction. You get the point, yada, yada, yada. It can just go down like this or up like this. So that's why even if we do get the retest here, we will only look for a short-term buy here, right? So that's about it for crude oil. Perhaps a little bit late for this discussion because the major play has already taken place. But what can we do? We only do webinars once in a week, right? So that being said, I'll just put my words to rest here for a bit and see if you guys have any doubts or questions. If you have, just put them in the live chat. Rhythm's a bit fast for me, but I'll watch the replay after, so it's fine. Thank you, Joe, for being so considerate. I've been watching your analysis from last few months, and it has helped me a lot. That's very good to know, Mohammed. And yes, guys, at this point, I do forget sometimes. We have not gotten anywhere near 1,000 views, which was our target from webinar number 1. So it still gets stuck around 600, 700, perhaps sometimes 800 views. I don't know why is that. I'm doing my best coming in here every week and doing detailed analysis. So I'd request you guys share the content. Again, keep in mind, we are already at 150, and this year I've decided to change things a little bit. If it works, that's good. Otherwise, as things are, we'll move on to something else, reduce the frequency or whatever is most considerate. So if you are enjoying the content, which I believe most of you are, do not forget to like it and share it, much more importantly, with as many people as possible, because otherwise, what's the point of doing these things, right, if it's not reaching the proper audience? What's that? Sometimes why is there sometimes 1 to 1 to 1 to and not 1 to 3? Yeah, that's a good question. So when I say nested impulse, what I do really mean is, let me just explain it. So Marco has asked us that why do I say 1 to 1 to 1 to sometimes? So it is the 1 2 and 3 and 4, and this is the 5, right? That's what you generally understand as an impulse. However, if I assume that this 3 will have an impulse, not assume, because we know 3 will have an impulse its side of it, right? We can now type this thing as 1 2, and this becomes, let's say, a Roman 1, a Roman 2, Roman 3, Roman 4, and Roman 5. and that Roman 5 will complete the 3, after which there will be a 4 and there will be a 5. Let me just make them circle degree so that you can make a distinction. Right, and now whenever I say 1 2 1 2, what I'm really saying is this one, this 2, and then this 1 of Roman degree, and then this 2. And if I say it again like 1 2 1 2 and then 1 2 again, that means I am identifying the movement inside this 3. I should probably change the color to explain this thing a little bit better. Let me see 1 second. Right. So when I'm saying 1 2 1 2 1 2, so this is the 1, this is the 2, circle 1 circle 2, Roman 1 Roman 2. And then if I say it one more time, it will be the 1 2 within this Roman 3. So this Roman 3 can again be expanded as a, let's just call it dot 1 dot 2 dot 3 or whatever, right? So then it becomes circle 1 followed by Roman 1 followed by dot 1. And if I say it again, it will be it will be even lower degree. You get the idea, I guess, Marco. Anybody else has any doubts? It was a pretty basic question, but why not clarify it for one of our group members? I'll take a sip of water. You're very welcome, Marco. That's good that you have clarified your doubt. And I think the Johnny has put a question. Johanny. Joe, if we see 1 2 1 2 in successive way, it means we are in a strong bull or bearish tendency. No, not really. That's not always true. I just say it in the sense of the nomenclature, because the nomenclature dictates we have a 1, we have a 2. So for instance, if I'm going on deciphering every single of these legs, I'll find many 1s and many 2s. Sometimes they are of relevance and I say 1 2 1 2 1 2, and sometimes they are not that relevant and I just say it's inside the 3. So kind of it's not really always true. What you said, it's possible, but it's not always true. I just say it for the sake of nomenclature or the naming convention. So if there are any more doubts, you can just put them in the live chat. Otherwise, I'm just moving over to the chart of gold. So here's a discussion from a last webinar on the chart of gold. Let's see what was being said. It was a lengthy discussion. It looks like starts around 18, ends around 29, more than 10 minutes. Anyways, let's play the thing. I think we had 2 counts going on in gold. One was that it's possibly a diagonal, which would mean that once we see a break below this white trend line, this 3-4 trend line, then we can look for sell setups. Classical sell would be break below test of the trend line and then look to sell for this last leg. And the other setup was bullish, I believe. Where is that? So other setup was suggesting that wave 5 has one more leg up remaining. Have I not discussed the explicitly bullish setup? Or have I? I think I have. Here it is 1 2 1 2. So nested impulse. Again, one of the cases which we just discussed on crude oil, we are discussing the possibility of the circle 3. Continuing within the circle 3, we have the dot 1, dot 2, and dot 3. Within the dot 3, we have the dot 1, dot 2, and dot 3. So 1 2 1 2 1 2. Nested impulse progression is incoming in this count again, which is something we just discussed. For those of you who missed it, what I'm saying or talking about, just go back and watch gold discussion. Near the end, we have discussed this concept in greater detail. I'm not going to repeat that again here. So those were the 2 counts. One was super bullish and the other one was diagonal followed by downside movement. And with that being said, let's now head over to the chart of gold. I seem to have some comments, but I'll discuss it after I've checked the gold, because I do have a position here. Whew. So where it is now, where it is 1 hour. So it failed the diagonal structure. Here is the diagonal count. It went above it, relegated that count. We discussed it all in live posts on our Slack group, and it is following the nested impulse. It is forming a series of impulse. What is generally going to happen in this case is at one point or another, we are going to see a break of a major level, and then I'll realize the impulse is already complete. Because you kind of do or can get lost in the forest sometimes if you go in too much detail of these things, but that's just part of the process. Let me remove the tag here. Yeah, so what I'm saying here, in gold, we are seeing a series of nested impulses. Bullish count is playing out from 2581. We have 1, 2, and then probably another 1 here, another 2, 1, 2. I mean, I'll just show you the counts. It's not very relevant. We are not very interested in all this. What we are really interested in is in the last part. Keep in mind, these things can change in a matter or fraction of a second. As long as the hypotheses are holding, the levels are holding, structures are forming as expected, I'll continue trading with that count. As long as I feel that structures are not holding, that means the count is probably incorrect, or maybe I missed something. Sometimes I do not like to check the counts in great details. It can take sometimes 4 or 5 hours. Sometimes it is just better for the market to relegate us with one stop loss. Again, these things are not very simple to explain. Sometimes you kind of want to feel what the market is doing by letting it play its hand. Right, that's what I'm saying, and that involves sometimes letting some money run with it. Anyways, so what we have here is what we should call very clear. We can just consider this as our point of reference, 2655. And from here, we will begin our discussion. We are assuming that we are seeing impulse in the other direction, yellow count. And we have the Roman 1, 2, and then the Roman 3 is still in play. Within the Roman 3, we have what you call dot 1, dot 2, and the dot 3 is still in play. And within the dot 3, we have double circle 1, circle 2, and circle 3 is still probably, it's already complete. Sorry. So we have one leg up remaining for the circle 5, then one leg for dot 4, I guess, and then one leg for dot 5. So we have two legs up remaining, and then when dot 5 is completed, it will complete 3. Roman, there will be what kind of nonsense am I doing here? This is not kindergarten. I'm quoting 1 and 2 is more than kids. Anyways, you get the point. 1, 2, and 3. Possible 3 up legs remaining if this count is correct. If not, we'll come to know soon enough. Right. So circle 3 is here. Circle 4 is in play. Circle 4 is in play. That means we are expecting sideways movement. Possibly it will take support around 2764 and possibly support below 2764. Where is 2752? Let's say. I'll just type them in. So these are the possible levels where this market can hold support. Right. So based on this analysis, I have taken a minor short position. The idea is that if we see a clear correction here, zigzag or triangle or complex or whatever this is, we don't really know what it is, what hand it's playing right now, but we do know that correction is expected. So based on that, I'll average in or get more of my position here. So possibly around the sideways movement, and best case scenario will be with this leg down. I'll look to add some more longs, right? That's the case. And the counter scenario is if it sustains below 2753, that's not good. That means this market is going down probably, or our analysis is incorrect. Both are possible, right? So our view main or majorly is straight up from here or here. That's our H1, suggesting upward movement, right? John, that was a funny bit of joke I put there. Anyways, guys, so I think we are done with the gold discussion. Do let me know if you have doubts or questions. I'll take a few moments here and check the comments here. So if you want success, it means we answered that already. Still, that's good, Joe. Marco is saying, Nirav, you know everything on the market structures. You are so powerful. Thank you for the nice comment, Marco. And with that being said, again, for those of you who are joining in for the gold discussion, I know a lot of people just watch the gold discussion. I don't know, for some reason, gold is very, very popular. Even people who are not trading it, I guess, would like to know the prices of it. So those of you watching it, we are on our target, or what do you call, goal, I should say. I think our goal is to reach 1,000 plus views every webinar. So if you are watching it now as a recording or whatever the case may be, I request that you kindly share the webinar so that we can move a little bit closer or surpass our goal of 1,000 views. Specifically, the people who enjoy it, kindly do your part. I'm guessing a lot of you already do it, but if you aren't, take it seriously. I would request you to take it seriously. Right. That's about as far as my request can go. Right. So with that being said, let's now head over to our next discussion, which will be the chart of S&P's 500. And let me just load the last webinar's discussion first of all on screen. Here is the chart of S&P. We are assuming an A down, B up is in progression, and then there will be we are assuming a flat correction here. That's the one. That's how flats generally look. Let's see what another count. The another suggestion here, as per Elliott Wave analysis, is that the C is already in completion, and we are now going to just take off from here. That was the second view. So if we are going to take off from here, we would like to see support on this trend line. So we basically have two different scenarios, as you can see. H1 yellow suggesting upward movement, S2 suggesting small up, then followed by downward movement. So we have both scenarios playing out in S&P. And in our last discussion, I mean, which was done on 17th of January this month, basically. We'll see what happened with those scenarios, over trades, etc., etc. And I think I should have shown we had some gold trades there. Anyways, we'll see if we have some trades on S&P, we'll show it there. So now we would like to head over and switch the chart to our actual discussion here. Now on screen live is the chart of S&P's 500 here. And first of all, let's discuss the triangle count, triangle variation suggesting that this is 1. This is 2. And once we see sustenance above this trend line, specifically a retest of the trend line, we will look for longs. Lo and behold, or whatever the proper English wording is, there you have it, proper retest of the trend line. So this marked what do you call buy setup for us, right? On S&P, I do have some longs in play. They are already in profit, like we have the trailing stop loss above our entry, so it's more or less a free trade. If we get to ride in a strong rally, that's good. If not, it may hit our trail. We can get out in profit and then re-enter later for the rally. That's what the best case scenario is, to play these long setups. Before we get into the analysis, here is the discussions, actual push or actual trade. Where have I taken the entry? I just wanted to show you very quickly. Longs auto closed. So we have closed something in loss here as well on January 21st. Added longs. Longs auto closed in profit as targets was hit. I think this was after the webinar discussion. I don't know. Or maybe before the webinar discussion. So we had this week we had what you call 2 trades. One is closed in loss on S&P, and this one is one we have in profit. We have what you call trail above our entry. Let me see if there is anything else. No, that's it. 2 trades only. So what I wanted to show you on gold, which we missed there, was we had a series of trades on gold, I think. Multiple longs. Currently, we are holding minor longs and scalp longs above. Scalp longs were closed at immediate target to 724. So that's one position closed. Longs were auto closed and minor profits still was hit. That's on 17th, the day of the webinar. So we had created 3 positions on gold. One was closed on the day of the webinar. So basically 2 positions this week. One is already closed in profit. Another one is open. And is in need of management, probably. We'll see in the next session. So anyways, coming back to our chart of S&P's 500, what we are seeing over here is an A down, B triangle, C down, 1, 2, 3, 4, 5. Perhaps we can call this as a 1, 2, and then this is third. And I'm looking at it as a nested impulse. Perhaps I can change my count here to just call it a 1, a 2, a 3, a 4, and a 5. It doesn't really change much of actually it does change a few things, but the direction remains the same. So I'll just conclude it. So this is, let's just call our bullish count, and the bullish count, our point of reference is coming at price level 5769, date around 13th January. We have what you call a 1, 2, 3, 4, 5, an impulse in the upward direction, completing over here. A wave 2, which is actually testing the trend line precisely as we expected in our classical setup. This is actually a +1 trade because it literally followed the thing precisely as we expected it to, like too precisely. Anyways, now the remaining portion, we can count it in multiple different ways. We can just not count it and just say that 3 is in play. And anytime we see a bigger correction for 4, we can then look to add more for the 5th, right? You don't always have to count everything unless you are doing short-term trades, scalping, etc., right? But that requires a different skill set. So anyways, what we can say is this is probably the 3, probably the 3 is complete here, probably this is the 4 in play, probably the 3 is continuing. I don't really have any specific answer. I have posted a nested 1 2 1 2 1 2 kind of count here, but I'm not very satisfied with that either. So that's why I'm kind of avoiding this part here. 2 3 different scenarios possible. But long story short, we are expecting one leg here for the 5th, right? So H1 is suggesting bullishness. And actually, if this count is correct, it's not going to be bullish. It's going to be super bullish. This leg can just take this market much higher from here, because we have already seen a very big correction time wise. So we are now expecting a bigger move price wise. That's generally how things work in life, or trading life, I should say. Counter view I have to discuss. The counter view is important here. I'll just squeeze this chart a little bit. So what we have for the counter view is leg down, correction up, and leg down. Let me remove everything. So for the counter view, we are having the point of reference over here. Price is at 6032, and from here what we have is a down leg, upward leg for a flat, and then another down leg, which can then follow another up leg. So count 2, or let's call it H2, is suggesting A down, B up, and C down. Now within that count, we can assume that the B is possibly having minor upside. It can actually, as a matter of fact, go to 6200 plus levels. So we can just redo this, assuming it's around 6200, then say C, and then up. So count 2 is suggesting, or hypothesis 2 is suggesting, that minor upside, which can then follow big downside, is possible. So this is the counter view. Again, combining both our H1 and H2, we do seem to be having some upside remaining on S&P 500. And that is kind of the reason I am more inclined towards taking long trades on this counter. And I guess that's why I am holding a long position here, right? So with that being said, I think this rough idea is what we had in mind, and I have already discussed it. Keep in mind the B can go to 6200, 6220, 22, 6240 as well. I'll just mark the final level which I expect it can go to. So up till 6240 it can go. It can reverse from between 6150, 6240. I mean, between this range also it can reverse anytime. But the long story short is we have possibly some upside remaining before the fall. That's what this H2 is suggesting. Now coming to the interesting details, or more important short-term details. Here we have some important things. First of all, this channel, which is kind of important right now, has our point of reference at the price level 5767. We have 1 up, 2 downs, double bracket 3, double bracket 4, double bracket 5 is in play. Now, if it is really going up, as I just mentioned, 6200 to 6240 can be seen. And as you can see, it is coming around 6220, 6240 something, the target to the upside of the channel. What I'm doing here is simply checking the projection of the channel if the market just goes straight up from here. Anyways, the counter view is if the market does not go up and reverses, we want to first see a break below this channel. So why not make an alert out of it? So if the market goes below this channel, then we'll probably look for sell setup, right? In that case, our hypothesis 2 will become activated probably. And hypothesis 2 was suggesting what minor up move followed by down move. So that means up move would be considered complete if the market goes straight lower than here, right? So that's our take, guys. That's our take on S&P. So I discussed now both bullish bearish count and then the higher time frame analysis, and I just discussed the shorter time frame analysis. So shorter time frame analysis is discussed in the reference to hypothesis 2. It can be a little bit too much for many people. I know that. It can be too much for me as well at times, right? So I know that for a fact, and I've been doing it for what, many years, 9+ years now. So watch the webinar again and again. If you have any doubts, by the way, you can just ask them live. Now I'll take the questions here. Any chance you can add silver as well in the webinar or in Slack group? So Raghu is asking for silver, and Raghu is a member of private Slack group. But the problem is with silver, I've tried and analyzed it many times. It just doesn't have the. I never liked the way it moves. It never gives very sustainable, strong, big moves. And the second reason is it trades in only two digits, right? Gold is or S&P is something. Let's just see gold. So it's trading in. Let me just explain the reason. So I'm going to go a little bit off topic here, guys, and discuss something which is more related to speculation in general, and something you should know, or probably something I wouldn't have discussed if I wouldn't have been asked this question. So the thing is, when you are speculating on something, anything for that matter, you are looking for moves. The moves can be minor moves like 4 or 5 points, 2 3 points even, and scalping could even be 1 or 2 points, right? Second thing, you are looking for major moves. Major moves can be 5 points, 10 points, 20 points, and then there are super bullish or bearish moves, 30 40 points, right? Sometimes we get those, actually many times. But anyways, coming to the point, if you are even looking for let's say scalp, by the way, you guys are okay with me going off topic here? I mean, I do run the whole show myself, so I can go wherever I want. But what I'm looking for is a confirmation that you guys are interested in an off-topic conversation here. Just let me know with a yes or no. I'll just take a sip of water, and I have some other questions here I can take if you guys are not interested. Be back in a moment. All right, guys. So I can see yes, 3 yeses. Thank you, Mohammad, Raghu, and Joe. So what I'm saying here is whenever you are speculating, the first law of speculation, or I should say guideline, actually, it is more like a law. You'll get it as I discuss it more. So the first thing about speculation is whenever you're speculating, you are looking for 3 types of moves, right? You want to scalp something. Darn the keyboard. What happened? Right, either you will go for a scalp trade or a small move or a big move. Big moves generally are not always caught. How we catch them is also something we'll discuss. Scalp, I'll just say, let's say 1 or 2 points maybe. That's the best, because what happens is at time and time again, market will give you a trade where you are exceptionally sure, 100% sure. You are so sure that you can say at that point in time that you are the god of that market. But when those things happen, they don't always give you 5 7 points. Generally, they are only good on enough for 2 3 points, right? So keep that in mind. I'll come back to it. Small moves, we can say 4 to 10 points. Big moves, anything more than 10. So 10 plus. Now, what I'm saying is that when you are very sure about the market, when you are 100% sure, all your counts are in alignment, the market move, the general sentiment, and you just have a feeling, you have the gut feeling, the instinct that this is going to work, right? Then you generally do not get anything more than 2 3 points, right? Mostly, of course, you can get that feeling for 40 or 100 points. We have caught so many trades like that. But generally, what I'm saying is general occurrence. I mean something that happens very frequently. So something that will happen very frequently is you will get these 2, 3 points, 5 point moves, which you are 100% sure about, right? You are sure about it, very sure, or let's call you are certain about it. That's the proper word. Now think in your mind, if you are looking to trade a 2, 3 points move, right? And you go in right at the very point when the market turns, how many points can you capture? The whole move is going to last 3 points, let's say. So how many points can you capture in a 3 point practically? Right? You get in at, let's say, 26:30 precisely, and the move is going to last to 26:33. So because it's a scalp, you cannot wait till 33. Everybody will have their orders placed, right? So you gotta get out before 33. So practically speaking, even in a 3 point move, you will never catch the 3 points. Very rarely you will catch the 3 points. I mean, and since it's a scalp, your position size will be big, so you are more at risk of getting caught in the wrong side, on the wrong side, right? So practically speaking, you will only be able to catch these 1 or 2 points. Yes or no, guys? Just give me a quick understood or why, right? Just type in why, so that I'm sure that you guys are getting my point, because it's a very important point for speculators. All right, so everybody is in alignment. Everybody is saying yes, yes, yes. So now you get the point. In scalps, if you are getting 3 points, you'll probably catch 1 or 2 maximum. You cannot wait for the third. In a small move, 4 to 10 points, you probably are better aligned. If you think it can move 10 points, you'll probably be able to catch 8 or 7, let's say. Right? In a big move, it's not an issue. In a big move, you can just catch whatever. That's not an issue at all. If the market is going to go 40 points, 50 points, then around that 40, 50 points, because the move is big, the volume will be big, and your orders will probably get filled without much of an issue. So you'll probably get a very big part of it, right? We are talking about the percentage part. Now think about it. Within 3 points, you were able to catch 1 or 2. So you were able to catch what? One third, two third, 33 to 66%, right? Percentage increase is a little bit. When you catch 10 points, you are able to catch probably 80, 70%. And it reaches even higher when you have a big move, maybe 90 something. So from a perspective of a trader, it's better to catch big moves. Big moves do not happen always. Small moves do happen a lot. And certain moves like scalps happen a lot. So now coming to the point which Raghu had asked in the question about silver, and why I don't like it is this thing trades in 2 digits. Like it's moving from, let's assume for the sake of simplicity, that it moves from 20, and what can it do in a day? Maybe go to 22, maybe go to 21. Even 22 is a big move, I think. Again, I'm not analyzing silver, and I don't even know what's the exact price it's moving at. I'm just assuming, right? Probably I should have opened the chart of silver. So here you can see this thing is moving between, what is this, 28 and 30. And if you go on the daily chart, you can see a single day's movement is what went down from 30.4 to 29.67. So what you are left with is a whole lot of nothing. You are not even getting clear 1 or 2 points. I understand you can go all technical and you can say we can use leverage and we can trade 26.001 or whatever the pips, what people call it. But to be practical, pips are something best traded in Forex. It's a terminology which actually comes from Forex. I didn't even know long time ago that there is something people call pips or whatever. They are just trading 0.0004th digit, and with the extremely high leverage, they are doing it. Now, why it is good enough for Forex is because Forex has exceptional volume. I don't know how much silver has, but it definitely does not have as good as Euro USD. We know that. So if you are going to trade, if you're going to make speculation as a business, always keep in mind that the most amount of moves you will catch with certainty are scalps. Next best is small moves, and big moves, they may come, they may go. They don't always happen anyways. right? And even if you do catch them, you'll probably be trading a small move, and you'll probably take 50% profit after 10 points, and remaining 50 you will leave to get lucky, right? To test your luck or fate, whatever, right? So keep in mind, as a speculator, avoid these kind of things. And fun fact is, even I tried trading this many times, I have hit losses and losses on it. The reason it just doesn't move like the things which I trade move. For instance, when I trade gold, it has wiggle room, it has room to play. 2-3 points is nothing in gold. And if you are good enough with managing your trades, you can move big volumes and make big amount of money within those 2-3 points. That does not happen with the silver. If you are wrong, you'll probably not get another good trade for quite some time, right? So first rule of speculation is avoid taking moves which are less than 5 points. If you are very professional, very good at it, then you can go for scalps, whatever proper pronunciation. Otherwise, just take moves which are 5 points or more and trade things which are at least 3 digits, right? Something in 3 digits and 4 digits is even better, right? What is this? Gold is 4 digits, S&P is 4 digits, right? Crude oil is a different thing. It gets a lot of volume, so in that case, you can probably manage the things. But that's one of the reasons why I avoid silver. So small question, big answer. Hopefully, you guys learned something. Let me know if you have any doubts on this. I have actually a point I can make about big moves here, how we capture them generally. But I'll wait for your doubts or questions for a moment here. We have gone off topic, so why not take the off topic as further as we can expand on it. By the way, if you have no questions, just type in understood or something so that we know everybody's clear. Let me go through the stream of yes. Raghu's understood, clear, Dawood, clear, Muhammad. So, Joe. So everybody is clear. So let's just now make the final point which I have in mind. Hello, Manuel. You have joined in quite late, I guess, today. So the final point I'm making about this discussion is about the big moves. Generally, you will catch them at times. We do catch them at times. As a matter of fact, in gold, we have caught moves 30 plus points so many times. Just watch any of the past webinars, any random one, and probably you'll get one move where we have caught 10 plus points, 20 plus points, or whatever. Right. But generally, what you want to do with big moves is you want to think of them as a small move. So let's say you entered 5 lots here on a 10-point move, right? Now, 10-point move, 5 lots. So if the market hits the 10 points target, you'll probably get out with 3 lots minus 3. And you will leave the 2 lots to go maybe 15 points, maybe 20 points or something like that. Right. So that's generally how you want to build up on gold. And as a matter of fact, those of you who are in the private Slack group, I suggest you go and check my gold trades from last week and last to last week. I have at many times tried to do that. Every time I was getting out with half position, like I will catch 4 or 5 points or whatever. I don't exactly know how many points we were catching. Let's say I caught 5 points in the last week trades. Then what I would do is I'll take out 3 lots minus 3 and then leave the remaining position. Put my stop loss above entry. Stop loss above entry basically means we are in a free trade. So that's the way you do it. You take an entry. Actually, I should explain it a little bit better. You take an entry at, let's say, 2500 and you take an entry for 5 lots. So as soon as you hit your first target, let's say 2505, or let's say 2510 for the sake of simplicity, you get out with minus 3. 3 lots you are done for, you get out. And then you leave the remaining 2 lots with the stop loss placed above entry. So stop loss will be 2505 or whatever. That's the general way you want to play big moves. Always, not always, but that's generally how you are suggested to play big moves. It's very important. And I also know that a lot of people would have read some nonsense books where people talk about risk to reward 1:3, or that is if you can make $3 by risking $1. That doesn't always work in real life trading. Real life trading is mostly based around scalps, where you are risking $1 and probably making less than $1, right? And yeah, sure, you can not take them and wait for small moves, but that's the fun fact. Scalps do turn to small moves, and then small moves do turn to big moves. You never really know which is gonna become which, right? Even in scalps, I do that sometimes. I'll take partial position out at one point, and remaining positions I'll leave with the stop loss at entry. Hopefully, you got the point. I'm not going to go in any further detail. I think we have taken way too much time here. We have already crossed the 1 hour mark here. But you can watch this point again, and basically what I'm trying to say here is reality is generally further away from expectations, right? So if you have read something in a book, doesn't always make it true. And most of the books are, I would say there are some very exceptionally good books. Some information I found very, very questionable in real life trading. Actually, this part was hidden. So entry at 2500, 5 lots, 3 lots taken out at 2510, and remaining left with stop loss above entry. Free trade. So anyways, that's about it for the off-topic discussion. Let me know if you have any doubts or questions on it. Otherwise, we'll move over to our last two charts, Nifty 50 followed by BTC. I'll wait a few moments here. Right. Our position sizing discussion. Yes, I forgot here, right? Those of you joining in late or watching it now, do not forget that we are looking to get 1,000+ views on our webinars at least. We are generally hovering around 600, 700, 800. So this year, consider that as a target, and I'll put in a time limit later on, few weeks or something. If we get the 1,000 views, that's fine. Otherwise, I'll probably change some things in the webinars, probably the number or the way I do these things, right? So kindly take some time and share this content so that we can reach our target of 1,000+ views, right? That's it. Manuel, hello, and Luis. Good morning to you, Luis. All right. So that being said, let's now head over to our next chart of, and forget about this off-topic discussion for the time being. What is the next chart? We just discussed S&P, right? Yeah, we just discussed S&P. So next chart will be our Nifty chart. So here's a chart of Nifty. I was bearish, and the idea was below 23077. We are looking for more sell. 23915 was the target, followed by 22656, and pattern was A down, B up, C down, zigzag pattern. It has Nifty has done very much almost everything as we expected. It's a +1 on Nifty again, just like S&P. Now we will look at the live chart here without wasting too much time. On screen now is live chart. Last discussion was on 17 January. Market closed on 17 January around somewhere here, 23,302. Right. The idea was it's an A down kind. There will be a B up, probably here. Maybe who knows? I was marking it as here at that time, and then there will be a down leg. So basically, the setup was below this low, whatever that low was or is. We look for the market to continue lower. Right now, I'll just show the actual count on screen: A down, B up, and C down, and show it in further detail. So from this point of reference, what is this price level? Whatever this price level is. Two, 4, 2, 3, 1. So 2, 4, 2, 3, 1. From here on, we are looking for A down here and B up here. You get the point. C down. Now, I personally think C down may be remaining here. Although keep in mind the minimum requirement for C down is it should take out the low of wave A. It has already done that. If the market really wants to take off, it can take off from here, but I personally do not think that. Let's call this as our H2. Straight of takeoff. And the main count I have is H1, which is suggesting C is still in play and it's probably going lower for C. So our main count is H1, C is still in play and has one leg down remaining, and the placement of B, let's see. So I have placed B like this. B is over here and C is remaining. Now again, keep in mind guys, I had probably mentioned it. I don't think I would have forgotten to say that, or maybe who knows, maybe I did. But anyways, it's more of a stock specific kind of market. If you guys recall, I had pointed out HDFC Bank in the last webinar. It has done terrifically good. It actually went as expected, literally picture perfect, and probably one more leg maybe seen on that counter if this market does play out as expected. But then again, don't rely too much on one stock. By stock specific, I mean scout the market for multiple stocks who are showing weak hands, and then do further analysis to figure out which one to sell short or which one will go down first as the market falls. Or you can also figure out the one which will go down the fastest. Depends on the way you are trading. Right. So I won't go into much details of this stock specific strategy, etc. You can just figure it in your own time. If you are in the group, you already know how to do things. If not, then we'll just put our words to rest about that here and discuss what this thing is. So C down can now go lower. We don't want to get an exact target, but a rough idea 22,544 is possible based on the channels level, right? And before that, I have marked multiple levels here. Let's see. Yes, so important level is actually 22880. So 22880 is actually an important level for this counter. Of course, it can go lower. It may not go lower, but our main idea of A down, B up, and C down, if it comes to fruition, then this level is probably going to get tested. Further lower targets we have just discussed. Our main hypothesis is bearish movement. If we are going to see upside movement, we will not be interested as long as the market is below 23325. So only above this level will we be interested in taking long trades. Right? Only above this level. As long as the market is not above this level, the bearish idea sustains. We look for stock specific shorts or even the index shorts if you know how to take them properly. That's about it for our discussion on Nifty's 50, right? And with that being said, we are now down to our last chart, which will be the chart of Bitcoin. Before heading over to the live chart, let's have a quick look at what was being said on this chart of BTC in the last webinar. So here is the recording from our last webinar. Let's move over to the chart of BTC and yeah, by the way, guys, while I'm discussing BTC, do let me know in the live chat how many of you guys are actually able to share the webinar once it's complete. While I keep saying it every time, and as I was saying that this year we plan to make it as a kind of a target to reach at least 1,000 views. It will be nice to have some comments from the people who are actually attending these webinars that they are sharing it. As a matter of fact, people who are not able to attend it live and are going to watch it as a recording later on, you guys can also let me know in the comment section down below that if you are sharing the content, if you are enjoying it, if you are not sharing it, why so? I mean, if you are enjoying it, you should be sharing it, right? And those of you who have not done their part, well, kindly do it. This year, we want to see a target of 1,000 plus views per webinar. Anyways, I'll wait for your comments while we discuss the discussion from our last webinar on BTC. And yeah, so we have discussed the super bullish scenario for down, impulse up. Let me see if there is anything else. It does look like we have just discussed a bullish scenario here. I'll just zoom it in. A up, B down, C up. So we are looking for 112,000. And we were heading up for the A. So we are looking for upward movement followed by a small pullback and then upward movement. That was the main theme in our last discussion. Now we can just head over to our current chart. Okay, so 2 people out of the so many people who are alive. Well, at least there is something better than nothing. Anyways, I would appreciate if all of you guys were sharing it. At least 50-60% of the people who attend these webinars live could have said that, yes, we do share it. That would have been really nice to hear. In case you guys didn't hear what I was saying, I was asking how many of you people actually share the webinar once it's complete. Do let me know in the live chat or in the comments later on. Anyways, not wasting too much more time in this. Here it is, BTC chart live on screen now. And from last discussion, 17 January here somewhere. Yeah, here it is, 17 January. The market, as I said, has gone up and then has gone sideways, and then we are expecting up. So it has kind of done as expected count wise, but I wouldn't say it has been very clear market because it has given us some sharp letdowns. I personally was thinking that this was the initiation of the B wave. Probably can still be taken as so. I don't know exactly, but let's. I mean, it has kind of followed the outline, but it's not exactly following the counts which we expected it to follow on the BTC counter. So let's have a relook at it. We were expecting A up, B down, and C up kind of progression. So in this case, we are assuming this as a point of reference. What is this price level is 89,207 something, and we are assuming this as the A complete. Perhaps the B is complete here. Let's see. And then another leg up can come into play. Or perhaps the B is continuing sideways as a flat, zigzag, or whatever it is. Right, so I'm not going to comment too much on what it is. Basically, the long story short is in this range, the market can just continue within the sideways movement and then go up. Right. So long story short is BTC is suggesting more upside is in play. Target wise, I think we can it is actually at lifetime highs, I think, right? Almost near it. So target wise, it will take out the lifetime high. Once it takes out the lifetime high, who knows even if this count will hold or it will just keep rallying. So we are not very much concerned about the targets here. We can just we do have some targets here, I think. We don't really have to care too much. We can just measure 1:1. So you can just always project the 1:1 measure for wave A. In this case, we don't have the wave B low. So you can see the rough idea we can is getting is 120,000 plus levels is the rough projection. So these are the expected, this is the kind of expected level. Of course, the market can do multiple different things, but our main idea is that this market probably will go there in a 1:1 scenario. We can also measure 61.8 and so on and so forth. But as I said, it's not really an issue. These kind of trades are generally taken by getting in long and then trailing the thing instead of just getting in long and waiting for the target. And that was it for our discussion on BTC. And hopefully you guys enjoyed it. It is a little bit disappointing to see that very few of you people are sharing the content. And again, I'll ask it properly at a better time. The way I timed the question probably wasn't where everybody was attentive. But do keep in mind, if you are enjoying the content, do not forget to hit like and much more importantly, share so that we can continue doing these webinars as frequently or even more frequently. So Joe, thank you very much for continuously sharing our work, and same goes for Muhammad for sharing my work. Yeah, I can't believe that either. What is the possibility of H1 in Nifty pre-budget rally? So H1 pre-budget rally. Well, Raghu, that's a good question actually. Budget kind of news events are very huge, and they can actually what you call distort the counts for a small period of time. That is, the market can just rally a lot for no reason whatsoever. So I can't comment too much on it, right? I've discussed H1 and H2 here. Probably I'll just give another look and maybe we can gather some points here. So he's asking the influence of possible news events. So the problem with news events is they can do just about anything. This could still be an A, and the news event rally can take it here and then shoot it down here. Actually, that happens a lot. The market rallies a lot in a very small amount of time and then shoots down a lot in that very small amount of time. So there isn't much I can say, but yes, you can draw some scenarios here. For instance, at once you can use this orange trend line we have. We generally do expect that the market, whatever it does, should remain within this trend line, right? So it can shoot up a lot within this trend line's range and then shoot down maybe, or if it goes above this trend line range, then probably it's doing a bullish count, right? Again, I have some more ideas, more detailed analysis. Perhaps we can do it. Obviously not publicly. I'll prefer to keep it private, and I'll share it later in the Slack private group if something becomes very clear. If it doesn't become clear, do keep in mind news events can distort the counts for the small period of time a lot with a lot of strength. They can just completely destroy your vision of the market. So do prepare, do remain prepared for that, and probably don't take the position if you are not very comfortable with it. That being said, I guess that's it for the answer. Nothing very clear. So Joe is saying a very long correction in time means a high probability for the market to go strongly up or down after, right? Exactly. That's the concept I keep repeating in more or less every webinar. No, sorry, man. I am not trading it, and I'm not going to track it. Dowd asking any estimate time for your BTC reaching 12000. That's not really much of a problem here. BTC is already going to take out the lifetime highs, so excuse me. It will probably do it in lesser time than it took here. It took 6 days to take this wave A up, so I'm guessing it will take less than 6 days. The reason is whenever the markets take out lifetime highs, they generally tend to have a new kind of speed here. So whatever this is, 27th January or before 27th January, roughly speaking. But then again, keep in mind, this is just a simplistic view. Sorry, not 27th. After 31st January or somewhere around 31st January, assuming that B is complete here as a triangle, which is just one hypothesis. Again, keep in mind, Elliott Wave does not give us a very strong perspective on time. While I do have some proprietary analysis on time, I again don't think they are going to be very much help here, and kind of not needed here in my personal opinion. So, Marco saying thanks. So, anyways, welcome Marco, and thank you guys for staying till the end. Hopefully, you like the content, and with that being said, I will close this webinar. We have done a lengthy one this time, and I'll see you guys in the next one. Take care, and do not forget to like the content and share it. Right. You're very welcome, Mohammed. That's good to know, Joe. You're very welcome. Take care, guys, and see you next time. Welcome, Daud. And welcome, Raghu. Bye, guys.